Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us on the show. Mayuresh, from the lows post Q4, that's sometime in April, most of these stocks have had a pretty good recovery, 10% up, 17% up for names like Tech Mahindra. Were you surprised by the resilience in the IT names, and would you change your position or your stance ahead of the numbers?
Afternoon, Reema. So relatively, mid-cap ITs have done and fared far better than the large-cap IT names across the board. And to a large extent, I think the revenue growth, both in constant currency and dollar terms, along with very, very stable margins, decent order wins, and a very positive commentary, I think all that was abetting the kind of strong moves that you probably saw among the mid-cap IT names. Now, within that, I think a lot of these ER&D companies, the likes of KPIT, Sonata, LTI, Mindtree, Persistent, had a very good run. But the valuations are a little bit rich at this point of time. Large cap names obviously disappointed in the numbers gone by. And to a large extent, the first half is still expected to be a little bit more muted, both in terms of fresh order wins coming in, the execution thereof. And though margins might be relatively better off, stable in my opinion, because of a lot of factors working in their favor and tailwinds that we have probably seen. Expansion probably looks very, very difficult from a margin perspective at this point of time. So our take is that a lot of these mid-cap IT companies, rich in valuations, are way ahead in terms of the key pivot levels on our own methodology. And therefore, pullbacks is something that we'll probably see, both from a valuation and a price perspective. For large cap names, obviously results will do a lot in terms of the re-rating of the sector. But I'm expecting a softish set of numbers probably to come through, and commentary also probably to remain a little bit on the softer side. So I think we'll wait for numbers to probably come through for the sector as well.
All right. Hi, Mayuresh. Good afternoon. Mayuresh, I wanted to ask you about Mahindra Financial Services. The quarterly update has just come in. The disbursements for the month of June, they're up by close to around 12%. Numbers just coming in. For the quarter, the disbursements are up by close to around 28%. Those are the numbers that have come in. They've also said the collection efficiency is at around 96%. The only problem, so to say, is that the stage 2, they're saying it's expected at around 6.5%. It was constantly in a declining trend. I recall that the stage 2 assets, out there, gross stage 2, it had declined. The previous quarter, they had mentioned that from around that 10% had come down to around 6%. Now it's moved up to around 6.5%. Your view on the stock from these levels?
Afternoon, Nigel. So for the space as a whole, including M&M Financials, the kind of updates that are coming through are very, very reasonable. You look at the updates and then the commentary for most NBFCs, specifically within the MFI space. And there are a lot of tailwinds happening for these players as well. To a large extent, the kind of overall book that they've probably got in the system itself, almost 4 lakh crores, expected to grow at a very, very decent pace over the next few years. 6 crore household with an average borrowing of 50-odd thousand, expected to be around 8 to 10 odd crores in the next 3 to 4 years, with an average borrowing size of almost 80 to 90,000, which means the book can actually double in the next 4 to 5 years in the MFI space. Having said that, the kind of disbursement growth that we have probably seen for the space as a whole, including M&M Financials, has been very, very encouraging. We're almost at the end of the rate hike cycle. So to a large extent, the better capitalized NBFCs, including the likes of M&M Financials, the stability in NIMs will largely be maintained. It obviously will come off from the peak levels seen a few quarters back, but it will be still better off than a whole host of NBFCs where the credit ratings and the accessibility to funds is a little bit on the lower side. So I think the disbursement growth, collection efficiency has shown a good traction. But within the MFI space, apart from M&M Financial, whoever holds it to definitely hold on. I think stocks like an Ujjivan Small Finance Bank, where the advances book has grown at a very decent pace, has crossed 25,000 crores. Deposit book around 24,000 crores. Net NPAs at 0.04. The housing part of the book has also compounded at a very good pace. Collection efficiency almost at 100% and capital adequacy remaining strong. Similar to the likes of Credit Access Grameen. I think the collection efficiency is extremely strong, expecting double-digit growth with 11-12% NIMs being maintained with strong capital adequacy. I think this space probably looks very, very good. Anybody holding on to M&M can hold on, but even with Ujjivan Small, Credit Access Grameen look to carry on the momentum as far as earnings is concerned.
Okay, so that's a lowdown on NBFCs. Actually, let's pull up the Nifty PSU Bank index if we can. Mayuresh, hi, my next question is going to be on the PSU banks because there's a catch-up trade going on in the market. Let's pull up both the charts. I mean, this year, the Nifty is now up about 6.5%. The Nifty PSU Bank is actually down for the year, down about 1.5%. And that's the reversal that seems to have started playing out at all-time highs. People looking for fresh ideas, looking for stocks that haven't run, and PSU banks haven't run. Mayuresh, now the question is this just going to be a one day here, one day there kind of a move, just a one-day rally? Or do you think that we are going to see a serious catch-up, PSUs on the move again after what was a phenomenal PSU bank here last time around?
Afternoon, Surbio. Absolutely. I think they were in a structural bull run of sorts in the last financial year. And to a certain extent, prices have actually cooled off or come off in the past few months. Now, 2-3 factors. One, I think the expected loss provisioning. How are a lot of these PSU banks going to account for that? I think that is one of the biggest headwinds that the entire pack probably faces. The second element is in a rising interest rate scenario, you obviously see deposit rates go up. And NIM compression is a given for the banking sector as a whole. A lot of commentaries are hinting towards compression of NIM probably happening. But the better capitalized banks should have relatively better performance like the better capitalized NBFCs as well. And the third aspect in terms of the entire credit deposit ratio and the provisioning itself, which will probably rule in terms of the asset quality monitoring. GNPAs, net NPAs have come down as a whole for the PSU banking universe as well. And therefore, I think the better rated PSU banks should probably still have some steam left. What we've got on our radar, so to answer your question, is Bank of Baroda within the PSU banking space. Around 2-3% off pivot at this point of time, and therefore that's on our watch list. But most of these parameters that you're speaking about, both in terms of advances growth, NIMs expected to remain stable over the next few quarters, credit deposit ratios expected to remain extremely strong, along with a very high PCR that they've probably done, ensuring that the pre-provisioning operating profits remain on the higher side. So I think one of the ideas from the PSU banking space will be back.
Mayuresh, do you track something like ADF Foods, huge volumes on it, and it's also, by the way, made a new life high after many months, almost 9-10 months. It's broken out into fresh highs. ADF Foods.
Sorry, Prashant, unfortunately, don't track.
Okay, all right. It'll maybe figure out, come up in the volume quant-based something. I mean, if you're tracking, if you have a filter or something, because it's got large volumes today. Power is another space and stocks that one hears about quite a bit. JSW Energy is doing well. Actually, out of the power names, that's the one which, many sell-side brokers are pushing. Do you have a view?
Looks interesting for a couple of reasons. One, I think out of the entire capacity that is incrementally expected to come through from 6.6 gigawatt to almost 9.8, the entire capacity will be renewables. So the management is very, very hopeful that by the time we land in FY26, 60% of the top line will come in from renewables, and they probably are extending that to 80% by FY30. Now, the kind of capex that probably comes through for thermal plants, solar plants, wind plants as well, entry barriers become extremely tough. And therefore, I think once this entire ecosystem comes in play for JSW Energy in general, and with accessibility in general with coal mines and the sorts thereof, you're probably expected to see cash flows actually improve quite significantly till FY26, resulting in both an absolute EBITDA growth as well as absolute growth EBITDA margins as well. So yeah, I think the sector is probably momentum. I think a lot of factors actually acting as tailwinds for this.
As we're getting into the last few minutes of trade, I just want to pull out the chart on ITC. What a move today. Now it's a 3% gain, and these are, of course, fresh all-time high levels for ITC. Stock touched a high of 460. Yeah, so this is blue sky territory for ITC, and quite a move, 3% up. Mayuresh, before we let you go, so the market's on the move, ITC is on the move. The argument is this is still probably the cheapest consumer stock there is out there. Would you look at buying at current levels?
Yes, it probably still persists with the argument of being the cheapest stock from a valuation perspective, but it's run up quite significantly. So I think we do hold this in our global focus list. But it's a little bit rich from the runaway standpoint over the last few months. Obviously, the expectations in terms of their cigarette business expected to do well, being a cash cow for the other businesses where a lot of capex is coming through. Hotels business on fire at this point of time. Agri trading, paper business has come back very, very strongly. And therefore, the consolidated numbers should also hold up for ITC. But I think it's run up a little bit too much for comfort. We still hold it in our focus list, so anybody holding it can hold on. Fresh investments, unfortunately, will have to wait for full match.
Okay, well, we'll leave it there, Mayuresh. Thanks very much for joining us. Good speaking with you. And it's a pleasure having you here, as always.